Good afternoon, and this is the Oak Bloke, and this is going to be looking at Anglo Asian. So I covered this some weeks ago, May the 3rd, and in this article, Worth the AAZ, and this is at theoakbloke.substack.com. None of what I'm going to talk about today is advice. You make your own investment decisions, but this explains how I made mine. So what I did at the time was I looked at just sort of how different copper plays had moved, and you can see here pretty much most stuff had gone down. The exception being the Anglo Asian, which was up. Obviously, stream of positivity. Of course, there's some that say that copper's going to go up. That hasn't happened thus far, and there's kind of evidence both ways. Certainly, there's long-term strong evidence that copper will go up, but short-term also quite strong evidence that it won't because of uh, problems with China, problems with obviously potential for worldwide recession, downgrades to world growth. Lots of reasons why you can't say that copper's ascendancy in price is nailed on. However, it's at 9,700. It's at a decent level. I mean, you should be able to make profits at that level if you've got an efficient operation. So anyway, I came out with the whole thing saying, well, look, based upon their disclosures, based upon their interim results, based upon the Q1 results, where they said, their operating costs were $15.2 million and they'd made 17.5 million revenue, and then they'd had other operating costs and capex, which may or may not have been sustaining capex. Is the point that in, we just don't know because they don't disclose things properly. So possibly a $2,000 dollar AISC, which is not great, not great. No sort of real visibility of what's going on in terms of costs. Um, in their guidance, there was no guidance as to one of their mines called Demirli. So this was, for example, taken from their presentation deck, I think it was. That again, the information was all over the place. So they sort of spoke about having these, um, you know, growth of production without saying where it was going to come from. So in one breath they were excluding Demirli, in another breath it now turns out that they were including Demirli, and we'll talk about including and excluding in today's article as well. So lots of reasons why. And then I looked at the process where 51% of profit production goes to the Azerbaijan government. So even if you do make a profit, half your profit is taken, and then there was tax on top of profit share. So, you just sort of think like, this is a very, I mean, it's a very good deal for the Azerbaijan government, but not so good for shareholders. And also just even things like when I looked at they said they don't track silver because it's immaterial. Well, when I looked at it, I was like, well, hang on, that's generating about 4 million of profit, which seems quite material to me. So the whole thing was just very frustrating. And I said, and I didn't write this off entirely because I said, well, perhaps they can, improve, but based upon what their current performance is, and also whether they've managed to stick to their forecasts, I'd rather wait on the sidelines. And I can see there were some people that uh, said that said various things, which fair enough. It's up to you. You can say what you like. But there was a number of people that said, "Well, I think you're wrong. I think you've got this wrong. You have this completely wrong, completely. not just partially, completely. So yeah, it's always good to kind of say, well, put your hands up if you've been wrong completely or partially. I think a lot of, of course, what I did was I based it upon facts, and the facts as they presented themselves were that the numbers didn't add up, and also that the costs were very high, and also that yeah, there just didn't seem to be a very clear picture. Now, out of the shadows emerges demurely. So, my one of my readers said to me, um, that they've got this mine called Demurley, and if you weren't at the last AGM, you wouldn't know about it. Um, that this Demurley is going to, it has 200 million worth of assets or worth of plant in situ, that it's AAZ's been given for free. So there's kind of hidden value not on the balance sheet, which is always a good thing to look for. I mean, I don't dispute that. AAZ don't do investor relations. No, yeah, no kidding. I was going to say another word then, but yeah. So I guess, where I come to then is to say, well, A, did I make a mistake? And B, is there now new information that makes me want to alter my conclusions? Which I like this quote here. You know, when the information changes, I alter my conclusions. What do you do, sir? Which I thought, so when somebody had said to John Maynard Keynes, "Oh, I see you've changed your mind," it's like, well, no, I've not changed my mind. When the information changes, I alter my conclusions. What do you do, sir? That's just, it's always Churchillian in the quality of that. But anyway, that aside, so let's get back to AAZ. So what did I overlook? So I went back over, what clues could there have been? So back in September, it was reported that they had unrecovered costs of $100,000 at Demurley. In September, they said it's a brownfield project in the early stage of evaluation, early stages of evaluation. In October, they said we've obtained restricted access and studies are underway. Okay. In November, we are analysing the Demurley property. We'll provide an update on the timing and cost of reopening. In January, they said investigations are underway. In April, they said there's been encouraging progress. That's all they said. So nowhere in any of the comms do they come back to provide an update on the timing. Nowhere do they come back on the cost. Nowhere. And that's just a fact. Okay, that's just a fact. In fact, in their guidance, February, I think that was, in their 2025 guidance, they actually say there is no guidance for Demurley for 2025. Okay, no amounts included in respect of. But of course, the facts have since changed. So 2.5 weeks after I wrote this article with the AAZ-ard, then the annual report came out, which was what, 6 months after, 5.5 months after, or certainly 5 months after the end of the year, so pretty slow, and that is talking about Demurley. So I don't accept at all that I missed anything, apart from I missed the AGM. But my contention there is you shouldn't have to go to an AGM to know about what is going on with a share. You know, to be saying things at an AGM that contradict the presentation, contradict the interim report, contradict the RNSs throughout the year is pretty awful. I mean, that is pretty poor, to the point where, I mean, surely you've got to be careful about doing that sort of thing as a PLC. There are rules that you should live by, And if you're telling one group of people and not the world at large, that can be interpreted as insider information. So anyway, I'm I don't accept that I missed anything. I do accept that there's new information. So let's consider that new information because it is substantial. So uh, price meanwhile's increased. So when I said I wouldn't go anywhere near Anglo Asian based upon the facts, it's since gone up 15%. So obviously people are keen, people like Anglo Asian, they've bought more of it. It's now at 194 million market cap. So inevitably the question is, well, is it worth another look? Okay, let's consider that. I would make the point that um, contemporary with Anglo Asian, I wrote about Golden Prospect, about Thor explorations, others. Those are actually up 25%, same as Anglo Asians up 25%. So I'm not at all bothered that I've missed out. I haven't missed out at all. It's perfectly fine. But yeah, look, I mean, obviously it has gone up, so that's worth another look. So let's look at it. So anyway, I can see that they've moved. This was the guidance, so they reckoned that they were going to achieve 47 to 53 gold equivalent ounces, sorry, 1,000 gold equivalent ounces in 2025. In the annual report, they moved that up from 47 to 53 to 80 to 85. So that is 33 about 33,000, 33 to 38,000 more than their prior guidance. So, near double, near double. That's quite a revision. You know, and this isn't based upon the fact that they've acquired a mine or they knew about this mine. They just chose to keep it off the books for whatever reason. So yeah, anyway, that's kind of a big move. Looking at the accounts, they say, oh, we're not going to disclose an all-in sustaining cost for 2024 because there were substantial non-production costs. It wouldn't provide a meaningful number. Now, I'm sorry, I don't accept that. I can assure you that knowing about what things are costing is very meaningful to be able to value something. So what I did was I worked out my own AISC. I'm not saying this is penny perfect because, of course, there are things that you can and can't include. So again, it's a little bit of a value judgment, but um, we can and the point I would make here is that they disclosed an AISC in 2023 when production was 1.3 million tons at 0.49 of a gram per ton, and then the year later it was just under half of that by volume, but double or nearly double by grade. So roughly, roughly, if your costs are consistent year to year, theoretically your AISC should be about the same because okay, your production is half, but the contained metal is double. Yeah. So the amount of recovered ounces or tons should be about the same, should be, but they're not. Last year, when I say last year, the 2023, the AISC was 1510, 1,510. I mean, it's not unreasonable to say, hey, like the 2024 one should be around 1,510, but it's not. Like they don't tell us what the number is, but I mean, you go and look at the costs. So cost of sale 49.6, that number there. Administrative expense 6.6, that number there. And 1.7 is the other operating expense 1.7, that number there. That's what I'm considering a best guess of AISC. Okay, you add that together, that gives you that number there, which is terrifying. How is it? How can it be? How can it be that you move from an AISC of 1,500 to 3.8 to 3,800? I, I mean, like your jaw should be dropping on the ground at this stage. And I don't think that number, that 3.8, includes the cut of profit to the Azerbaijan government, which should really be considered a cost rather than a reduction of revenue. It's a cost of doing business. So it should be treated as a cost. So when you factor that in, I mean, your mind explodes at that point as to how unprofitable Anglo Asian has been in 2024. Now, obviously, this is looking backwards, and we of course are going to be also looking forwards, but it's a dreadful result. There's no two ways about it. I mean, like it reminds me I'm just thinking of the company that went bust quite recently in Mali, that they were getting these kinds of AISCs, and it crippled them. I mean, they they and to be fair, they had all manner of other problems, but I there's the saying, isn't there? There's no smoke without fire. Well, I'm sorry, there's a lot of smoke. So forgive me if I am a little bit dubious about the smoke-free atmosphere. So anyway, that's kind of a big. I think that's a big consideration, that if you're either thinking of investing on this or are investing on this, I mean, if you've made 25%, you're sat there thinking like, is it going to go up, or is it, I just be tempted to take the 25% gain at this point. But look, I mean, obviously you're excited about the future, so let's look at what that future could be. Of course, we've got the first quarter 25 results that um, I covered this in the last article, but just to recap, they made 17 and a half. The costs, they said that I think it was a cash profit of, so there was sort of OPEX of 16.6, so they made a 0.9 million cash profit. If you work it all out, you kind of get to something where the the all-in sustaining cost um, is about 2,400, so it's less than this number here, to be fair, which is good. Like, that's the direction of travel you want this to be in, but it's still very, very high, and it's only really the silver credits that deliver any profit at all. In other words, this AISC, this revenue minus this cost. I mean, you can see it here, like they're making no money on the copper, virtually no money on the gold. Now, the excuse, of course, is that these are the dregs, was the comment that came back from a reader. Well, if that's true, then why are the dregs going to remain in production for the next 4 years? If we go and look at this chart here, obviously it's a small slice, but Gedabek remains until 2029. If you look at it really closely, it looks like it declines. Like 2029 is not as large as 2025, but they're not closing the mine down. So it's not that much of a drag if they're still continuing production for another 4 years. Like, I don't accept that that's the case at all. Anyway, so yeah, just not a very good result. But of course, this is just Gedabek. This isn't Gila. It's not Demirli. So it's that, like, what we've got to look at is Demirli and get and Gila, of course. So yeah, and it does head in the right direction. So that's, not a great result, but not a terrible one. Again, though, like, you couldn't base a 195 million market cap valuation on that Q1 result. You'd want to be seeing a better result than that. And I guess you've then got to think, well, okay, if they do everything they say they're going to do, I mean, let's look at what they say they're going to do. Uh, let's kind of move on. So what I do here is kind of say, well, look, let's draw a line. So everything that I've talked about is kind of almost, this is in the past, this has already happened, but as I say, it sort of explains where we got to today. So let's draw a line. Let's sort of see where we go from here. So 19th of May, Gila commenced production. So what I've done in my estimate now, again, there's, I mean, all we've got is the guidance that says, the production forecast production is going to be 80 to 85 thousand gold equivalent ounces. And of course, they remove that gold equivalent ounce target in the annual report, but we'll come on to that as well. Um, so 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 yeah, look, I mean, I sort of say to myself, well, normally takes a few months for these mines to get going. 4 months, I'm kind of choosing, sort of using as a ramp up time. We can see here it's expected to produce at 50 to 60. We can see here that there's zero 0.8. So anyway, I've put all of this into a chart. 4 months, at 25 a month, followed by, and I'm going to go with the top end. So I don't want people saying, oh, well, you went for the minimum, so that's why the numbers are bad. I'm going to go like start off at 25, 50% of the minimum, but then move it up to 60. So we're going full whack, not the 50,000. We're going to go 60, and we're going to go with that grade. I'm going to put in a recovery level of 55%, which again that's kind of not far off best in class. Perhaps it'll be lower, perhaps it'll be higher, but that gives you sort of something. Gold recovery at 75%. Again, using that same pro rata to get to a number of ounces. And 4 months is June, July, August, September, 4 months, and then from 1st of October, 3 months till 1st of January, and then this is 2026 steady state. So the run rate on Gila is that it will deliver 3,500 tons of copper, and 21.8 kilo ounces. So when you sort of turn that into gold equivalent ounces, you get to 10.5. When you do the same, add the gold, you get to 32.5 or 32,200 on a year. And during 2025, again, taking this number, I get to 12,000 gold equivalent ounces. So 12.5, or 12,500 ounces. So 12.5 could deliver plus the Gedabek 30 gets you to 42.5. So because the guidance is 80 to 85, that therefore means that you need to kind of have another 40 from Damirli. So we'll come on to that in a minute. Also wanted to call out the what I called out before, that the broker report said, an AISC in 2025 of $1,332, and that they would produce 6,700. I mean, I'm kind of working through the numbers. Gila 1.3, Gedabek perhaps 1. So 4,400 to come from Damirli to kind of reach that. But to get to this 1,332, when we know that Q1 was already vastly higher, um, I mean, it's just like I just cannot see how you can get to those numbers. That here you've got this. I mean, even if I say, well, Q1 is going to be like 9% of the annual forecast production, like the weighted amount of that AISC drops to 1,500, but you'd need to be able to deliver the rest of the year at 1268 gold equivalent ounce AISC to hit 1332. In other words, it would require a vast transformation to the cost profile of this business. So I don't think that's terribly likely, if not near on impossible. So 2026 outlook. So as I say, Gila, 60,000 ore a month would give you the 32.2. Now this Gila, they do, I mean, you can see it here. This is close on sort of about 9,000 tons of copper per year. So like that's very contradictory, because of course up here we're saying, well, based upon maximum 60 at 0.88 at that level of recovery, Um, that delivers 3,500 tons of copper. So how can they deliver 9,000? I mean, you'd have to have sort of like your recovery factor at 150%, or you'd have to have a grade of like 2.7% copper. Do you see what I mean? Like you've got to have like the forecast that they're saying they can achieve out of Gilar is based upon like, or you'd have to triple production from 60,000 tons uh, um, per month up to sort of 180. Like something's got to give here. This doesn't add to 9,000, right? Unless, well, you tell me how you can get to that number because it just seems like completely impossible. So I don't get this chart where they say they can transition um, and deliver, and also just the fact that Gilar didn't even start production until mid-May, and yet it's going to deliver the same amount of copper in 2025 as it will in 2026. Like, like they're providing guidance, but then the guidance they're providing makes no sense whatsoever. Like, are they going to produce less in 2026 relative to 2025? Or they've just drawn some charts that are just complete garbage uh, that people are relying upon, and I've relied upon today to kind of come up with an assessment, whether I'm right or wrong. But all I'm doing is I'm basing it on their numbers, and their numbers fill me with concern because the numbers don't add up to one another. Like, how can you get to the numbers that they say they're getting to? So, big red flags. I'm sorry. Anyway, and I've turned that into numbers. So I've kind of looked at the amount relative to the 10,000 markers here to work out, well, that's kind of what they're saying, and like they're assuming that there'll be no depletion whatsoever, which again I sort of think, well, come on, this is mining, things do deplete, that's just the way of the world. So to assume that you can produce the same amount of copper year after year with no decline at all to the grades, I mean, maybe you can if you've got like precisely the same amount of but it tends to be that you get to the best bits first. And anyway, I again I sort of wonder about that. So anyway, let's yeah, I mean, they also sort of say, oh, well, we're going to stop using gold equivalent ounces, so we're now going to forecast in a different way, which again, like actually, that just feels like a red flag as well, because like the way to avoid being measured on things is to change the measuring stick, because then people kind of, you can't measure them because like there's no comparatives. Whereas I've stuck with using GEOs because they are at least giving a comparative. And not being funny, but if gold goes to 4,000, um, I would imagine copper would be at or around 12. I don't think the 3-to-1 ratio for a gold equivalent ounce is going to change that much. That I think 3-to-1's a fairly reasonable number. I mean, today it's a reasonable number where, well, it's slightly below 3. It's probably about 2.9, but back 2 months ago it was about the same, about 2.9 to about 3. Start of the year it was about 3. Last year, 2023, it was about 3. So it's you've got to go back quite a way for it not to be 3. Obviously gold's gone up. So yeah, I don't accept this idea that you should now dump the gold equivalent ounce to report it a different way. And also, like, they don't say how they're going to report. I mean, are they going to do copper with buy credits of gold and other other metals? Again, there's just no clarity, which just feels like another red flag. Okay, sorry, I'm being very negative, but I'm speaking my mind as to having gone through this now as to sort of how it then looks. So look, this is where I'm now considering demurely. So the I mean, there is this little comment here where they say there's indications of up to 35,000 ounces of gold per year were extracted. Um, Again, we can see we can see that there's copper grades of 0.41. Um, we can see that there's a 6.5 million capacity. So once again, what I do is I say, well, I'm not assuming that they're going to start at 6.5, because that would probably not be realistic. But I'm pretty generous. I say start at 1 million tons rate, so that'd be 83,000 a month, reaching 3 million tons rate, which would be 250,000 a month, and then you get to the full 6.5 rate by the 1st of January 2026. And I'm assuming that they start 1st of August, which, I mean, is only what, 6-7 weeks away. It's not long away. Is it likely that it could be as quick as that? I mean, I don't know, but I mean, I'm trying to be generous here. Trying to give the benefit of the doubt. Let's go with 1st of August, and let's see if we can get to those 80,000 gold equivalent ounces. So that's a picture of Demurley, in case you didn't know yeah. Well, where we get to is with the copper, we get to 7,000. So this is based upon 83,000 for 2 months. Is that 250 rate for 3 months? Is that gives you 2,400 tons, which would be 7,300 GEOs. So yeah, I mean, that plus that gets you to that. Gets sorry, no, sorry, yeah, that. Yeah, so that sort of gets you to 7,000. So it doesn't really get you to that 80,000. Forget this bit. I'll amend this after the video, but that shouldn't be there. So I sort of say to myself, well, what have I missed? So yeah, I mean, if I go back over, you know, where sort of the production should be, the only way I see how you get to the guidance is if you include that 35,000 of gold. That's the only way. That is the only way, because in 2026 they say they're going to hit 120 to 125,000 GEOs. Again, to get that growth of 80,000. Okay, if you include gold, then you get there. If you don't include gold from Demurley, you don't. But there's no JORC resource for the gold. All we know is that suggestions were that they were up to. So you've got to be completely bought into the idea that that is just a fact and not a suggested, not an up to. Again, that's a red flag. You know, they don't say that they're doing it that way with their guidance, but that's what the guidance interprets to. If you interpret it based upon this number that they share here, okay, with this number here for Demurley, what's that? 7,000. I think I've got it. Sorry, 6,000, but 6 to 7,000. That bit there, okay, and 17,000 the year later. You don't get to the GEOs that they say that they're going to achieve. You just don't. If you include the gold at the full whack of 35,000 a year, you do. To actually um, to within a very small fraction. So yeah, if you take the copper for uh, yeah, I think what's happened here is that I've mistakenly left that as Gila, and that should be reworded to Demurley, because it is Demurley. That's my bad. So let's just quickly yeah, I'll change that afterwards. But anyway, that gets you to sort of 79,000, which is as close as damn it to the um to the 80,000 guidance number. Okay, so that yeah, that kind of feels to me that okay, fair enough. So anyway, what I then do, because I'm, as I say, I'm trying to sort of work through whether this is or isn't viable at 195 million. I'm not not trying to prove that it's bad or wrong. I'm just trying to work out what 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 it would take. So if I take the production numbers at face value as to what they say that they're going to achieve based on that chart, and what I'm doing is based upon the copper, I'm saying, well, how much gold should come out of the ground corresponding to that volume of copper? Because obviously the ore contains the copper and contains the gold. So if they're getting this much copper, the read across is they must be getting that much gold. These are the numbers I come out with. So in 2025, they're going to get 1,000 GEOs of copper. Sorry, yeah, 1,000 tons of copper. This is tons of copper that add up to 8,300 that turn into 25,000 GEOs. Okay, so 1,000 tons of copper from Gedebek, 1,350 from Gilar, 6,000 from Demirli, gets you to 8,350. That gets you to 25,000. Then corresponding gold, 24,000, 8.5, 7,300. So I'm sort of assuming Q2 to Q4 is going to be identical to Q1 when it comes to gold production. And that gets you to, again, I've typoed there, that should be total gold. Gold equivalent is 41,000 there. So let's just do that. Yeah, so that kind of gets you to yeah, just sort of gets you to the guidance, more or less gets you to the guidance. Now, what this then gets you to is something where I sort of take these numbers here, which again I like to think I'm being quite generous, that the gold equivalent ounce is, either that gold is 3.4 this year, 3.6 next, 3.8, 3.8, 3.8, and it might be more, but let's say it's those numbers. Or the gold equivalent for copper would be 10,200, 10,800, 11,400. Yeah, so quite, above rates for what it is today. So again, being quite generous, I've then worked out, well, if you take this level of production, this is the margin you would need at, so I'm saying like 6 times price earnings would be a fair valuation, but because the government of Azerbaijan take 51%, you need to produce 3 times earnings to get 6 times earnings, because the government are taking half. Okay, which kind of then means that in order to hit um, the valuation of 190, well, I say 195 million, you'd need to have a margin of 2,600. In order to have a margin of 2,600 at a supposed rate of 3,400 revenue, you'd need to have an all-in sustaining cost of no more than $739 per gold equivalent ounce in 2025 in order to hit that valuation. In other words, it's virtually impossible to hit the valuation based upon what we're going to see in 2025. Even if Demirli comes online 1st of August, even if Gilar ramps up to full production by 1st of September, even then you're not getting to anything like what the current market cap is. However, if you fast forward to next year, so next year, again, if so we're saying if Demirli is at full speed, yeah, 6.5 million tons, equates to 52,000 gold equivalent ounces. Okay, and add to that Gedebek and Gilar. So Gilar at 25, Gedebek at 21.9 gets you to 101,000 gold equivalent ounces. you'd only need a margin per equivalent ounce of about 1,000 to justify the valuation of 195 million pounds. Okay. Um, if we take 3,600 as the average rate for next year, as long as you've got an AISC of 2,562 or below, then you'll hit that valuation. In other words, from next year, if it all goes to plan, well, yeah, I mean, this is worth more than it's worth today because, I mean, in other words, to be on that level of AISC would be a bit mental. I mean, that would be a very high cost per gold equivalent ounce. Um, but I'd want to be able to see that it was not as anywhere near as high as that. I'd also want to feel a bit of comfort around the rate, but I'd also want to feel a lot of comfort that these forecast numbers are even sort of halfway towards what they should be, that you are getting 100,000 gold equivalent ounces. So in other words, you'd want to be able to see that Q1 26 production was something like 25,000 gold equivalent ounces. Yeah. If you weren't seeing that, if you were seeing that as, like, say, half, well, the valuation metrics change completely. That turns into a required margin per GEO of 2,000. That would become an AISC of no more than 1,500, roughly. In fact, if I run, sorry, apologies, let me just sort of put this up on screen because this is quite useful for you. That yeah, if we sort of say, well, that's basically coming off that, and that's coming off that. That in turn is coming off the valuation here of 81, and it's coming off um, the um, yeah, so it's coming off the margin. So yeah, if we take this, so this is the margin. So if we drop that down to, if we drop that down lower, then we get to a different and lower number. So if we said, let's take that as half, yeah, you see your margin rises, and then you get to an AISC of no more than 1928, if this number here is half of what it should be. So that's the thing. There's a sensitivity to this, and I'm not attempting to make any attempt at what are the costs going to be, because there's no real way. The only this is what I'm doing here, is I'm doing it in reverse, where I'm saying, well, rather than sort of saying at this supposed cost of production, I'm saying at this supposed production level with this level of revenue, this is the cost where this becomes interesting, and this is the cost at which it becomes overvalued. So undervalued, overvalued is dependent on what the AISC ends up looking like, but obviously it's the production level that then generate or drives what the AISC also looks like. So anyway, that kind of concludes what I was going to say. I think I don't agree I was wrong fundamentally, that there was a lot of stuff missing that's now revealed post me writing my article. So, but there's a lot of contradictions, a lot of things where a lot of red flags that I've covered in today's article, today's presentation. None of this is advice, but I do worry about this. But equally, I mean, if the interim report and if the Q3 production and the full year, like, as the picture emerges, then yes, my view of this will further change. But based upon the 2024 results, I mean, yes, I can see a way forward with them early, but I would also want to see some evidence that it was actually achieving anything like 6.5. I think just to kind of buy this share on the expectation that they're just going to be able to hit these numbers um, at who knows what cost level, when historically they've not managed to achieve a very good cost level, and also have been quite circumspect about the facts. It it it's a, like, as far as I can see, it's quite a gamble to kind of think that they are going to achieve what they say they're going to achieve. Anyway, that's kind of my conclusion. So I'm waiting on the sidelines. Um, I mean, I do also conclude the article by saying, well, look, if they can get to that fabled 100,000, and if they can achieve a 2,000 per unit margin, in other words, if copper is 10,000 a ton, they're able to sell it at 10,000 a ton, and their all-in cost is 4,000 a ton. Or if gold is 3.5 an ounce and they're able to produce that at an AISC of 1,500 an ounce, then the valuation would be more than 195. It would be, my target price on then would be £3.60. It'd be 120% higher than that price there. But I don't yet see that that is evidenced. So I would, yeah, I would sit on the sidelines. Not jump in at this stage is kind of where I conclude, and that's based on the wobbly and contradictory forecasts, and the presentation of the numbers. Uh, These numbers are not adding up to one another, and yeah, that's my view. Anyway, hope that's useful. As I say, it's not possibly going to be everyone's favorite video, because uh, I'm no doubt going to be told how boring I am and whatever. But don't watch it. Like, I don't want you to watch it. Go and do something else. But equally, if you are interested in this is aimed at people who are considering buying this share, or have bought this share, and seriously want to better understand its forward prospects, and not just sort of buy things and cross your fingers. I mean, if you're the sort of investor that crosses your fingers, then good luck to you, and don't watch this video, because it'll be boring for you. And best of luck with the finger crossing. If, on the other hand, you want to try and be analytical as to what you've bought or what you're planning to buy, then this video is for you. So that's probably my take on these people who say how boring my videos are. Of course they are, because you're crossing your fingers, my friend. Keep crossing them. I'll cross them for you. Good luck. This is the Oak Bloke signing off. Cheerio for now. Cheerio.